compared to, well, I don't want to say it gamble, playing the probabilities, it's fair enough, but if you play the probabilities, you want at least like more than thousands of trades in backtesting. Otherwise, you're better off going with the flow. If you don't have these 1000 trades in your backtest, well, you might as well go with the flow and see if that plays out. I mean, right here, that's pretty obvious. Let's see if we get something on the 5 minute. 5 minute bearish fair value gap. Depends on how deep we retrace. Stick to the 1 minute for now. Take our first partial right here, open up with a new bearish volume imbalance. We hit the low, all these equal lows here from the left to the left. And yeah, then my final target would be all the way down here at the London session low, targeting ultimate move. Placing my stop loss at break even now. See if we can get filled here on that account at the buy limit to the tick. With Apex and prop firms, we would have already been filled without issues. Yeah, valid 2022 model. We even close below this low. Question is, will we get back up into this? And even then, that's that rule-based stop loss approach. Stop loss up here doesn't make sense at all. Not a tiny ounce of sense. Open up with a bearish volume imbalance on the 5. Let me log into the trade day account. Trade I have to take. What's happening? Oh, I'm on the wrong chart to take this. Actually, I think I wanted to do that on ESZ. So we took that sell side. Question being, is that a manipulation move? We don't know. We can't predict that. Can only stick to our rules for this challenge. Let's see. That's a 5 minute candle. Stop loss placement of choice. 50%. See if anything lines up here with us on the 1 minute. Let's put it up here. Go to the 5 minute and see if we can get our entry on the trade day account. Where am I logged into trade? Oh, come on. On NQ. No, that's topstep account. Right here from the high of the day, trap volume long. Let's see if it wants to offer us the fair value gap entry. Kind of have to use micros here. If we even get up into that level. And release some of these trapped longs. Where we're sitting at current balance. 337, yeah, let's risk that. Place our limit. 2-to-1 risk reward would get us all the way down here. Set and forget, log out. Go back in here to our 1 minute time frame scalping. What do we hit? Inefficiency. Right here, we already spoke about this one right here. To the tick. As long as we see that, we will never hit our entry here on the 5 minute. We're now just taking these equal lows. These are out. Now we close below. We should be in 3-4 mode. Did both our? No, I'm still short with one, but on ES1, so I guess I would have to go over here and log into the paper trading account. See how easy that entry was? Fair value gap, small risk. Now we hit the midnight level right here, the stashed line. I don't think we will get the opportunity to get in on this YouTube model before we snatch sell side. And even if we do, no. You can almost log back into that trade day account. That's the thing I don't like about 100% rule base, because it doesn't give you room to breathe at all, to think. And like I said, we don't have that 1000 trades backtesting results where we can see 4K, at least like last year, what happened, blah, blah, blah. Yeah, now after going back all the way to the midnight level, imagine we get our fill up here. That requires lots of bullish order flow to get back up. Kind of trying to trap shorts while trying to continue higher maybe. No. Let me get rid of that. That short's negated for me. That's done. Low risk entry. If we would have seen a close above, we immediately exit. We try this fair value gap right here. See if we really want to give a decent retracement into this. Add it to the position size. Now we didn't add, but we respected it perfectly. Now let's see what we do around the midnight level if we want to take out these London session lows coming from the high of the day. And then you'd be waiting, oh, okay, my 2022 model didn't give me the fill. You wait for it to retrace up and wonder why it's hitting your stop loss. The objective has already been completed. And they don't want you to get in up there. Otherwise, they would offer all these traders that are trapped in here an opportunity to get out at break even. Rejection, make bearish engulfing. Should have taken that on the funded. Well, live and learn. Let's see. Was rather rushed, just started the stream, and not enough time to prepare here really. Open up with a volume imbalance on the 5. Yeah, so overall I think it just helps being in line with order flow instead of like, okay, still waiting for your entry order to be filled. I mean, imagine we get the up closing candles that we need for that like this. And then open maybe up with a bearish volume imbalance and we get into our fair value gap. Do you want to short this? I wouldn't, to be really honest. That's the thing that sucks sometimes during the New York session. During London, we tried the exact same thing. Previous days high taken, market structure shift, bearish fair value gap. We got stopped out. Seeing a bullish model forming right here without sweeping the low. Market structure shift, bullish fair value gap. We tapered that to the upside. Bouncing off the midnight level. Go to our 1 minute time frame. Stop is already at break even. Starting to get some traction here to the upside. Let's see if we want to use this area to reject. And a little bit of position size. We immediately bounce up from the midnight open. 5-minute volume imbalance. So let's around, tested the VWAP, hit all the inefficiencies that were left behind. So let's see what price is up to. If we close above them, it's going to be it for the short. I think afterwards we will see short-term highs being met. It's 8:48, not 9:30 opening yet. They might leave these lower lows as a target for later during the New York session. Well, but I would be mad at myself if it happens to play out. So I'm simply going to create my limit order. And so we have the 2022 model. We didn't snatch London sell side, neither did we take Asia sell side. So we're just going to let it rock and play the setup. There's no point in taking the London setup and now seeing the setup, getting our short-term pullback. We'll see if it's a short-term pullback later on. Stop loss at the 50% here. Let's see. Good morning, Volker. Or good afternoon. Hey, Agent Smith. Yeah, I'm sharing my screen. That's all good. Open up with a bullish volume imbalance back above the VWAP. This is our entry bearish fair value gap for the 2022 setup. Did we close above all that stuff? Yeah. Let's get rid of that. So a nice strong bounce off midnight. That high is next. Let's see what we do inside this fair value gap. 1 push, 2 push, 3 push, revert. First push, manipulate. Retracement, second push, third push. 3 drives lower. V-shaped recovery. Yep. We try to set up, that's the best we can do for the 66-day challenge. It's day 8. We're back in drawdown, mainly because of the mistakes that we took, or that I took a trade outside the London kill zone. Shouldn't have happened, shouldn't have been in the books. But now it is, and we can't really change much about that. Let's check out the 15-minute, what that's looking like. Start to hesitate here for a little bit. Question is which candle we would choose as our breaker block. Could choose this one. Could use this one because it's in higher high. Lower low. Fake out wick. Lower low. Yeah, really this one. This entire candle right here. Or just the overall area right up here. can see that old London session high, we reject, we close above it, we hold support. Now we close below it, so we would expect resistance from that overall area. At 4,530. Let's see. This one kind of forced to deviate from the plan at least a little bit here. I mean, 12-point stop loss doesn't make sense because it's just screwing up our risk to reward ratio, but we give it room to breathe. Above our high right here. If we get above this, there's no reason why we shouldn't go back above here. Starting to put in bullish order flow, kind of a left shoulder, head, right shoulder setup. Let's see if we get our tap. Hit that breaker block. Yep, we're inside that now. So this is our market structure shift level. Snatch the trend line liquidity. But didn't fully complete the move. Yes, this could be a potential unicorn setup, though this wick is, I don't know, looking nicely with the rejection. Maybe we get our short old London session high, resistance, close above, hold support again, sweep a low, continue higher, consolidate, jam traders up here. News event, stop the shorts, stop the longs. Deliver a pullback, hold support and continue higher as a little cool down, we could say, PPI news event. So we hit our old London session high, highest up closing candle, 355. That's what I would really use as the break as it lines up with this general area. Otherwise, we would use this down closing candle, and we fit that just right here. Check out the 1 minute, see how that's going. So we took out the short-term high, closed above, leaving behind a bullish volume imbalance. Right now, going with the flow. Wouldn't try to short this, but let's see. Bullish fair value gap. Want to see that hold up in order for us to get our fill. Would need to take out this high right here to paired with a 1 minute bearish fair value gap. Rejecting nicely off our breaker. Mm, 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 mm. Mm, 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 mm. One minute fair value, 1 minute. $8.57, so we get our new hourly candle very soon. Check out what that hourly candle looks like. 15 minute. Going to close in 2.5 minutes. That London session was something for the books. Market structure shift on both the 5 and 15 after taking the Asia high. Fill. Get everyone excited for longs. Snatch it away and continue back up anyway. Not respecting any of the algo inefficiencies. That's why we, or how we can tell that market makers are likely involved. Bounce off the midnight, equal lows, Asia lows. Well, the opposite scenario would be to try to long this. Understanding that traders likely tried to get in short on the news and got in likely very late on that third leg. That's what we would expect. And now they're paying for the long. But I would imagine that 40 seconds to go. Let's see. Not trying to complicate it too much today. Why am I drawing up this trend line here? Because it just really brings to show how price likes to move. We use the stairs up, step by step, blow off, and then use the elevator down. Delivered with the news event, of course. Stairs up, elevator down. No fill. Let's take a look at NQ here on the 5-minute time frame. Big wick to the upside. Also didn't take out many of the lows. Shifted structure. Bearish fair value gap comes in up here as well. But will we get up into that? We'll see. Go back to the daily. We filled in that entire daily volume imbalance here to the left. That's the 4-hour. That's the daily. Daily bearish volume imbalance. Not many things really separating us from taking out the July high. That's the August high. Yeah, July right here. We already took the August highs. September is all the way down here. August, already took those. I know this is pretty bullish. And we reverse away from the breaker block. Just missing our entry. They really didn't want to move price into that area where most of the trap traders are likely sitting at, where our fair value gap is right located. So if we continue lower from here, we understand it happened from the breaker block. Got a perfect setup, even with some initial doubts with the sell-off. So let's check that out on the 1-minute time frame. We don't really want to see support in any of these inefficiencies. That would just confirm the long more, basically. Took out a short-term high, got rid of all these last entries on the third leg lower, being leg number 1, leg number 2, leg number 3. Boom. Hunt some stops. Continue the journey lower. We'll see. We were there, we were prepared. Decided to put on the risk, but Take a look at 1 minute. Could be forming the right shoulder here. It's not really what we would want to see for our short. The rejection and then the continuation up higher. I would have preferred getting the fill and then rejecting. Now that's just putting in place more and more bullish order flow. Let's see. Take a look at the DXY for a quick switch. Daily time frame. Daily time frame took the low from yesterday's CPI news event. The low of the day, and is up at the high of the day now. A little whipsaw. So we took out the high of the current daily candle and the low. Hit a bearish fair value gap here on the 15, 1 hour, 4 hour. Daily inversion fair value gap. Go back to NQ, take a look at that. Grinds lower, also hit the breaker block right here. Stone closing candle. Inside the volume imbalance, and it's rejecting. Yet the rules say we take the entry on the fair value gap and not the breaker block. Ideally we want to see that overlap, just to optimize the risk to reward ratio really. So now let's see, can we fail holding these fair value gaps, this unfilled volume imbalance especially, and break below the midnight level. Take out the London sell side, maybe even the Asia sell side. And once we see that fail, we can remove our orders. Keep holding perfect support on this volume imbalance. And with every down move here, I think it's very likely that we trigger more and more retail shorts into the market. If we happen to continue back up. Back below the VWAP and Q. Not really looking for divergence or confluence with the DXY today. Keep that clean. One less thing to look at. One less thing to make you doubtful. Just go back here to the daily time frame, no, 1 minute time frame, and remove some of these drawings here. basically all of them. We want to keep that chart clean to view what's happening on the daily. First of September. And we continue lower. Breaker block entry, safely placing your stop. Accounting for the fair value gap in case you targeting the low of the day is the only thing that we can really do here. And then we would roughly get a 2-to-1. Let's see, measuring from the high to the low of this wick, the 8:30 open. Above the 50% is what I would consider safe, relatively safe. 1.5 risk reward to the low of the day. Compared to our entry up here, could get our 2-to-1 before hitting the Asia session low. $15-minute time frame, left behind a bearish fair value gap as well. But we might not mitigate that. And revisit that area later, maybe for the New York Open. 8:50, 8:55, 9 a.m. new hourly candle. Let's see what that looks like on the lower time frame. 9 a.m. And we fail, we break lower. Will we manage to reach the London session lows now? First push lower on the 5, second push lower. Let's see, we're back at the midnight level. That was our chance to get in, missed by 1 point. Anyone took the short of the breaker? Ryan, Marley? Marley, did you counter trade me again? Nine, 10, 17 minutes until the New York Open. Well, gotta be honest, I have to get some things sorted out today, and Oh, this would have been the opportunity coming from the high of the day, high of the week here on Wednesday, taking out the previous day high once and twice yesterday as well with CPI news. Didn't get the fair value gap fill. Otherwise the setup was okay. Of course, we know that could have also failed. It's hindsight now. Let's see what's happening at this low. We want to see that area fail and then the continuation lower into Asia. Like during London, if you would have waited for your 2 a.m. low to be hit to get out, taking the 2022 model here at the high, market structure shift, bearish fair value gap, or you would have been left at break even likely, I'd say. Continued higher, bounce off our trend line until we didn't. Just preparing and setting up for the news event. Where's my mouse there? So now we closed below the midnight level here on the 5-minute time frame. Good confirmation that we might want to continue lower before initially holding support here, retracement entry. Of course, there's always the possibility that the retracement entry ends up being the reversal, but you only know that once you took the chance. Take a look at NQ. So we took our low right here at 845. Let's see if we capitulate now into our London session low. There we go. Immediately reject from that level. Already absorbing buy stops. Or sell stops. Buying them up. DXY pushing up higher, looking at that. Yeah, not really. Now equal lows one more time. Still holding on this overall support area. But even just, yeah, making it lower probability for if price comes back up to this level for it to then play out, because then we would have had a new structure shift by then. After trying to break level 1, 2, 3, 4 times basically, snapping away from it. Oh, to the tick. Immediately start buying back up. Back above the midnight on the 1. No entry for me on this one, same as you. Micro on the NQ, but on HA. Should I share my profit for the day, last night and morning? Feel free to. Looks like you already did. Well done, H. Smith. the hedging machine. And after I see the setup being presented like I want to see it from the high of the day with the PPI news driver event, everything else other than that would be chasing, I'd say. Or yeah, just going with the flow. Nothing wrong with that. It depends on your approach. But it doesn't fit into the 66-day challenge. Well, at least not another loss. That's fine. But a little bit unfortunate that we haven't been filled. But we would also understand the narrative now, according to the market maker, why we didn't continue up higher into here. We took out some of these last leg lower. First push lower, retrace. Second push lower, retrace, fill inefficiency. Third push lower, hit the midnight level, run away from that again, take out a short-term high, hit the breaker block, not allowing price to really retrace higher here, because that would offer most of these traders up here to get out of potential longs if they didn't already. Who knows? So now we have more equal lows. And a nice trend line here. Close back above the midnight level, open with a bearish volume imbalance. Still waiting for that to be cleared, but otherwise what's happening on TradingView. Settlement price, back adjustment, open interest now in B3 futures. Cool. Whatever that is. Trapping the longs. Did you take a short on? DXY pushing higher and NQ also continuing lower, but we see that we right here we form these higher lows. We didn't breach that low right here just yet. Well, only as we did, we wicked it. Come on, I'd say it's time to break. I'm gonna put this in my journal because it's a nice setup, really. Trapping the longs. Hey, day trader. We unfortunately missed our fair value gap up here once again. We hit the breaker block, but we didn't retrace all the way back up into our fair value gap. We missed that by 1 point. We saw the trend up higher, had our trend line market structure shift, using this candle as our breaker block with a fair value gap inside of it. So we didn't get trigger on our short here on the 2022 model challenge for the 8 until 11 or 12 a.m. New York session. In case I see something and I have the time to mention it, I will alert a 5-minute setup if one comes by. I mean, it's up to you how you enter on these. If you choose the breaker block entry, which is perfectly fine, you just have to manage your risk accordingly. How much you're prepared to lose, where should be your maximum stop loss level. Calculate your risk based on that, or set your take profit target and go backwards. If you want a 2-to-1 and you really trust that the breaker block is going to hold, and this fair value gap that we're not going to go back above the 830 level, there's your 2-to-1 by going backwards. From your ideal take profit target to your entry, the breaker block, fair value gap above should hold resistance. That's not going to cover you with a little wick, in worst case with this volume imbalance, but you can choose, okay, let's do 5 points. That should really get me covered here. I really think it's going to continue lower, and that's perfectly fine too. That's the experience coming with it. But something like that, you cannot backtest that. You simply cannot, because this would be a slight variation, or depending on your rule set, I'd say, I guess you could backtest that. But well, I guess there's a reason no proper backtest of the 2022 model is circulating, with ICT promoting it, or coming up with it, and a following of more than 1 million people. Eventually one would start backtesting that strategy or that model. But it comes down to not being as simple as that, like simply waiting for this pattern. Sometimes we do get our entry up here. Sometimes we do get our entry only at the breaker block. Sometimes we only use a inversion fair value gap, which is making it kind of tough to tell you which one we should go for. Like right here, we kept on holding perfect resistance on that inversion paired with the breaker. No need to go above and to go all the way up into here. Then you do your back testing. Okay, sometimes like 10 trades you use the inversion, 10 other trades you use the breaker block. Well, now you go into live trading. Which one are you going to pick? It's not as simple as waiting for an indicator telling you to sell right here. Okay, you take that. There's a little bit more to it, a few more nuances. $9.25. I'm gonna scratch that limit order. And see what the market open does, but I think I'm just gonna call it a day. I would expect these lows to be run, and this to be run as well. No point in me engaging any more than that. So guys, if you have any questions, now would be the perfect time to ask. I'm considering buy now, since we must go. Who's saying that we must go back to fair value gap? No one. By now it's a possibility, yeah. But, well, maybe trust your gut feeling. I don't want to interfere with that at all. But I'm not gonna go short up in here again. After hitting low again. So now we fill a couple of the inefficiencies that we left behind. Let's see if we disregard them here on the 5 minute. 9:25 New York Open in 1 minute. Check out what the 1 minute time frame is looking like. Mini head and shoulders pattern. What highs do you mean? This high up here? Fresky, do you leave your limit order still on the 2022 setup? Yeah, I thought so. Be pretty reckless. 9:30 opens up. It would be too funny if it still ends up working out. But at this point in time, we would have already seen a contradictive market structure shift right here, making a lower low. Take a look at NQ here. NQ failing to make the lower low. All these equal lows, they look too good. Marley, I hope you trusted your gut feeling and hopped in long. Manage the risk well, and you get rewarded. Let's watch it on a 1 minute. Consolidate. With these equal lows, trying to trap more traders into a short. Look at this price action, how we bounce off that same level so many times, making these higher highs. I don't know, it's kind of hard for me to believe that we're gonna go above this wick at the high of the week, while I still theoretically like the setup with these equal lows below, if I'm being really honest. And we didn't really sweep it. We only hit that low, inducing more shorts. Quickly trying to stop hunt them with the New York Open. People entering on fair value gaps. Or these shorts from here where we drew the trend line. Done. Out. Hit the breaker block again. Take a look at NQ. NQ is continue. I'm gonna add this order. Fuck it. I'm gonna risk it. If we tap that fair value gap, I want to see what happens. With all these equal lows below. What's the worst thing that can happen? At least we're inside the session. We have the fair value gap. If I would see that in in hindsight, backtesting it, very likely would have also taken it because we Didn't clear sell side yet. Let's see. Hit these highs once again. Stop loss for me goes right above this candle's wick. And Q now made the lower low, so that's bullish no, not really bullish SMT divergence. Yes, has already made that lower low. So while that's pushing up, and Q is now pushing back again to the upside as well. Our old high. NQ, ES, DXY. Alright, so we're tapped in, I think. Yep. Took these highs and this high right here. I'm gonna play this as if I would be tape reading. If I see the close above, I'm gonna get out. Trying to keep my risk small here. Target my 2 to 1. Close right on these highs. Check out the 15-minute. We also have that 15-minute bearish fair value gap here that's lining up with our 5-minute right at the high. So where does that 15-minute start? Right at the high that we just swept. So basically this range being our 15-minute, going down to the 5. This is our 15-minute bearish fair value gap. Let's get rid of the breaker block that's just covering too much space. We have our entry like this. Let's also take a look at the consequent encouragement of this fair value gap. Keep an eye on that. We basically, if we're in this trade, want to see this to become the fake out move, to get all these 830 shorts after 830 shorts out of the market, with leaving the sell side liquidity and low of the day untouched. After a possibly confirmed high for the day is in, we will see. Just retested the VWAP here. Likely filling in some lower time frame inefficiencies. Not really. Not that many inefficiencies here. Can also follow it on a 1-minute time frame. Get more information. It's our 15-minute. stepping further into that fair value gap. Order flow still showing bullish tendencies. Let's see, in 1 minute we get the close confirmation. If we happen to close back above the 830 and do not respect the fair value gap, I don't have real interest in holding on to this trade. Pretty hard to place my stop loss anyway with that wick. We hit the 50%. Consider it filled. "20 seconds to go. Let's see if we can get a close a little bit lower. After hitting that 50%. 3, 2, 1. One minute time frame, what we're looking at. Yeah, just some chop, but forming higher highs and higher lows. Now we have two bullish inefficiencies here. We didn't really shift structure because we only wicked above. We just swept that. At least that's my perspective. Okay, so now we tapped the old the previous day's high, Tuesday's high. It's Wednesday already. Paired with a bullish fair value gap. Let's see what happens around that area. We want to see that area fail for the short. If you think we're going to go long, good area to long from. And a bullish fair value gap below that. But if we're right, and this has been a trap to grab some liquidity, some easy liquidity, and not the liquidity above here that has already been hunted with the news event, then this should have been the trap they've laid, trying to get longs in the market, stopping out all the early shorts that saw the 830 dump. And no rejection here ideally. Close back below the midnight, finally snapped the London sell side. And I think we shouldn't have issues hitting our 2-to-1. And then I guess I get rewarded for sticking to the plan. Not trying to think too much. But not out of the woods yet. Anything can happen. Check out the 1 minute time frame. Nice market structure shift here on the 1 minute. Higher low, higher high, lower low. No inefficiencies to use though really at this point in time. Like said, could still be bouncing off this 5 minute and completely negate this entire down move. But I like that we hit the 50% and that we didn't just wick inside of it with one little tick. The cool thing about this trade day challenge is that I really got detached from it. Sweep. Let's see, 1.5 minutes to go. If we hold support in here, I'm gonna take the stop out at this high. No reason to watch it go back again in this area after just perfectly respecting bullish order flow. We want to see the sell side pool being hit. That has been set up. All the retail support and resistance traders have their stops below here. That's at least what I anticipate. Got to anticipate something. Let's see. Kind of rejecting, but the candle is not closed yet. Check out the 15. 15's looking nicely with that rejection. Ideally, we get a down closing candle also for the 15. 40 seconds to go on that. 5-minute time frame here. So that's starting a new 15-minute cycle before we get the new hourly candle at 10. Last 15-minute cycle after the 9:30 open. 20 seconds to go. We already close, looking like we're going to close below this. Looking like. Have to wait for the confirmation. 6, 5, 4, 3, 2, 1. And we close below, yep. So let's see, we closed right at the high of this bullish fair value gap. Like I said, it's nice to see the confluence that we didn't close above here. So regarding that, at least on the 5-minute, we only had wicks above. If we go to the higher time frame, the 15, we also only had that sweep, filling in this 15-minute inefficiency, also hitting that 50%. And on that same 15-minute candle or cycle, we rejected immediately. Nice rejection wick, wicks to the upside. So that's all lining up with the trade. If we would have seen the candle closing above here with the inefficiencies and now holding support, well, that would be a new 2022 model, but this time to the upside. Like I said, I'm targeting mainly the sell side liquidity pool. And if I'm correct about the fake out move, we should see that hit rather quickly. How many points is that? 11 points. No, but I'm going to stick to the 221. Having my stop loss up here. What did I use here again? I think the 50%, correct? Almost the 50%. I think just the 1-minute candle high initially, yeah. Okay, so we touched the midnight level again. Rejecting from it immediately after touching it. Potential fake out move. Sweep, 15-minute time frame, rejection, equal lows. Asia session, equal lows. Let's take a look at now. Well, measuring that manipulation move from the upside doesn't really make a lot of sense because of this wick. The only thing we can look for is what area we wicked away from, being this 4-hour higher time frame fair value gap, that highest fair value gap before we would have snapped the high from the 14th of September. We already took out these highs yesterday. That's a daily bearish fair value gap right here. Okay, snapping away from it. Wicks to the downside. Like I said, we not really take a big loss. I think that's only one. Yeah. Almost 1 point. I think that's acceptable. And I think it's also reasonable to move it here, because if we hold from these inefficiencies, that negates that entire fake out idea. We also likely see the 15-minute closing up in here, which be rather bullish. Then we just chop down here after the 8:30 news candle. We want to see the momentum continue lower after tagging out all of these shorts right here, trailing their stop loss, because other than that, there's not really a good place to trail your stop loss, and also to fake out the longs who buy support. Haven't expanded the range since the 9:30 open really yet. So we closed right on at that same level. Next 5-minute candle, 9:50. So now we're inside the macro. Perfect delivery from the midnight. That's really fascinating. Can't really use something on the 1-minute time frame other than a potential breaker block. So we form a higher high, higher low, and we push one more time into the consequent encouragement. That's our breaker block right here. So far we've respected that pretty nicely. The inversion also has been respected. Wouldn't have been nice to see a close right back above it. But we want to see that last level of defense really now, at least in my eyes, to be broken. Within that new last 15-minute cycle before the new hourly candle. What happens after the hourly candle, with the next hourly candle? I mean, just taking a look at the hourly time frame, what happened during London? We went down, went up, went down, went up, continued up a little bit, trapping more longs. Last liquidity sweep with the PPI news event. And looking good. Really feel like I deserved this one. Let's see. Close below this fair value gap. That's what we want to see. Once again, we hit our support. Now let's use these wicks here. I think that's fair enough. Lowest down closing candle, or yeah, right here. Something like that. NQ having an easier time to continue lower, apparently. Taking a look at the DXY gets our eyes off the charts here from ES. Not that we're really worried, but we snapped the CPI low. This plays to the upside, and we keep on pushing, which could help ES continuing lower. And well, my 2-to-1 risk reward theoretically is hit, assuming I always risk 5 points. But now that we're finally breaking, now let's just secure that. Be happy with that the trade played out. So usually my risk is always 250 bucks. I took the risk right here, wanted to see this fair value gap being respected. I mentioned that I'm going to tape read this more, so if I would have seen the close above, I wouldn't have taken an entire $250 loss on this one. Our fair value gap entry on the 5 came in right here. So if we negate that and close above, that would have, yeah, wouldn't, how do we say that? Wouldn't have confirmed the short for me, basically. With, just getting distracted here by the continuation lower now. But I'm perfectly happy with that. Almost back to break even, having recouped all the little mistakes that I did this week. It was a tough one, gotta admit. I had my doubts. I mean, you seeing me going into the stream, oh, equal lows, oh no, pushing back up, but well, that liquidity pool has been raided. Now we get rejected. The 2 to 1 from my entry up there. My stop loss was up here, my entry was right there. It's right here. Can I say one of the toughest trades that I took in this challenge so far regarding the entry. We closed below the midnight and below our inversion, so that's nice. Of forming the inversion. Get rid of this support, but we still didn't close below that London low. Taking a look at NQ. Capitulated at the 950 candle. That's our last 5-minute candle before we get the new hourly. But really we didn't do much so far, just looking at it from a 5-minute time frame perspective. See if the overall 2 to 1 would have been hit. Basically the Asia session low would be the next sell side liquidity target. Oh damn it. Not damn it that I closed. I'm perfectly fine having closed here. And I think today we got the narrative right. It was hard trusting this, seeing it fail so many times. But I think, yeah, this wick here to the upside just gave me that little bit of extra confidence that up here we've swept. That's done. It's not many traders putting their stop above here that's worth grabbing. But the question being, where are the stops then? Well, big obvious area. Where's the money available to grab? Okay, are we gonna deliver at the New York Open right from here, being 2 points away? No. We tried to trap a few more longs, make it look like a structure shift, really make it irresistible. That's what we spoke about yesterday on the stream. For the long, to snatch this liquidity, and if we go to the 1 minute, also this short-term high right here, and reject to continue lower. Market makers are experts at understanding us, understanding our emotions. I mean, they have all the data laying in front of them, how we think, what triggers us into a trade. They can just test different things, lay the trap and see, does it work? Nah, didn't work today. We might just use our old technique again. They have a playbook, and yeah, understanding that helps, I'd say. Let's see if we want to keep on going below this low and form a new low of the day below the Asia session low. NQ took the London session low, the Asia session low for NQ comes in down here. Check out the DXY. The DXY helped. And keep in mind, new hourly candle coming in soon. Really been fucking around the entire day around this level. No reason to, like, yeah, especially since I hit the dollar amount target. for the trade to, yeah, hold on for 1 or 2 ticks. Yeah, 2 ticks basically here. Really just trying to be content. Wouldn't, okay, yeah, I get that question. Completely sticking, I will check out the Discord questions in a second. Just letting it sink in. According to the rules, if we would be a robot or if we would be a machine, our stop loss would have looked like this. We could enter on our inefficiency after our market structure shift. We saw the stair steps to the upside, holding on this trend line. Peak formation to the upside, displacement lower, inefficiency. Those are the instructions that we give the bot or the machine. And it's putting always the stop loss because it's defined in the code at the high. Therefore, it's going to use a look back. That's going to be right here. So I'm just curious if I would have chosen that high, basically with the set and forget approach, if that would eventually still work out. I mean, if we continue to sell off, well, don't think it's really that hard to hit this level, but so the potential is there. 15-minute time frame, what are we looking at? Ooh. Wick up and wick down. This time having snatched or like, yeah, cleared that sell side. Open up the spread a little bit, stop out all the CFDs. And immediately reject. Volume imbalance back above the midnight. New bullish volume imbalance. Fucking hell. Glad I'm out. So right now, if we want to continue framing the short, we'll look at these inefficiencies here. Inversion fair value gaps to hold resistance. We don't want to see closes back above them. That would just put us in unnecessary pain. So let me detrimental for me, too much confidence. I can feel the pressure, spread is killing me today, I'm on the edge with nerves. No, we shouldn't touch fair value gap anymore. Nice, Freshkey, well done. Oh, well done. So today, I think most of us actually caught that setup. Simply just looking at price action, then close above, we saw all the confirmations. Okay, we still weren't, like we could have still simply reject from here once again, but really there's nothing up here that has been cleared. If we go to the higher time frames, like I showed here, we hit that 4-hour inefficiency. It's reasonable to expect some sort of a snap, and that news candle right here delivered it. There's not many people playing their buy stops above here. Like, oh, if we break this, we're gonna reach the all-time high. Question is, when the market makers look at their terminal, they see, okay, where do we have most of the positions? Support and resistance likely just around this area. Bookmap can help with that, but we didn't really need Bookmap on this example. You can see, okay, traders are trapped high. Didn't give them very long to potentially get out at break even. Let's say some traders are still long here, hoping that it's gonna bounce back for them to get out at break even, or maybe because they're so stubborn, they still want to see that same high to be taken because they maybe missed the opportunity to take profit. I don't know. But there must be something going on there. We can't expect retail traders to be super smart. At least not everyone. Not trying to diminish them, or I mean, we're basically also retail trader, just using a different edge. But we try to look at price action from a different angle, from the angle, or just trying to imagine what the market maker perspective would be. Okay, we sweep orders. This is done. Pin bar rejection to the downside on both the 5 and the 15. We have all these equal lows, so where are orders resting? I'd say down here. Just a guess. Alright, so New York opens up. Bullish. We have our inefficiency. Of course, like always, it could have been the case that we close above and continue higher. But I think the narrative fitted here. So instead of immediately taking these lows, they saved them before the New York Open because they wanted to induce more liquidity. That's what we would call inducement or engineering liquidity, forming more and more equal lows, moving away from it, and then the trickery where they try to make you, they don't really have to force everyone into a long position right here. It's good enough if they hold you back from taking a short, because then you don't make money, blah blah blah. Makes sense. Not up to what the market makers are up to, I'd say. And yeah, well, you're just too afraid to take a long against this bullish momentum. That's the minimum goal. Ideally, if they do a really great job, they try to catch you long before they snap the sell side liquidity. What they're gonna do right now, God knows. Bearish fair value gap here on NQ, that looks nice. That looks nicer to continue lower, but we already consolidate. Kind of not the biggest fan of consolidations at the low anymore, but as long as we respect our inversions, no reason to get scared or anything. Protect your stop at break even if you're still in this trade, maybe with a second contract. But I think a second contract depends on your account size, of course, for 25 or 50k accounts. Also depending on your risk. Kind of over leveraging, if you're asking me. Oh, you already left, Presky. Well, anyway, are there any questions regarding today? I think I mapped it out pretty nicely. I have you muted right now as I'm on a call. Been looking at possible manipulation. I've done well on paper trades, which I think is detrimental for me. Too much confidence. So I guess those were paper trades. Yeah, overconfident. You want to be well balanced on the scale. You don't want to be too confident. You don't want to be too afraid, too cautious. And thank fuck. Thank God. Really doing the damage here. Let's go to the 1 minute. Snap out of our TraderVate account and jump into our Apex paper trading account. So let's see what we're working with. So what's happening right here? We snap below the slow, immediately push back away, continue higher and higher and higher, consolidate right inside our 5-minute inversion. Note that we didn't really leave it, we didn't violate it at all until we do. Volume imbalance, back above the VWAP, back above yesterday's high. Let's see how this candle is going to close. Check out the 15. Yeah, not looking too good. Is anyone still in? Yeah, imagine that. I don't want to imagine that. Yeah, CPI, PPI, market makers are much more active than usual because that's when they can manipulate more. They can use the news to their advantage. They find a reason. If it's, I don't know, like that beat the market maker guy said, if it's your grandmother beating their toe against the couch or something, it's, they find a reason eventually. They are limited, yes. They can't just move price up 1,000 points, stop everyone out and go down 1,000 points. And I don't have too many tricks in there. Yeah, definitely. Otherwise, fundamental news trading would work. Okay, is CPI going up, down? Well, initially, I mean, you would assume then no volatility at all, no. Bring it back to, hang on, 1 minute time frame, 5 minute, close above, bullish volume imbalance. Ay. Let's bring it back to yesterday's CPI news event and talk about that, detached a little from what is happening with price right now. So yesterday's CPI, if they weren't manipulating it, we wouldn't get a wick like this to stop everyone out before we go up, because theoretically in a perfect world without market makers manipulating anything on these news events, well, we put the setup in place, the 2022 setup right here. We talked about that before it happened. And we see, okay, inflation is going down, decreasing. The US dollar value is decreasing as well. I mean, it's pretty obvious what we saw yesterday. That sudden drop to the downside. But well, on ES, we moved to the upside because the XY went down. I don't know, what I don't understand is inflation going down. Wouldn't that be, at least that's what I would assume from the fundamental perspective, a good sign for the US dollar if the inflation rate is going down? Am I wrong on my thinking, Agent Smith, guys? Like, imagine that happening in Europe, and we see European inflation across all these countries. Inflation going down, yet the valuation, the dollar index, is going down. The dollar, therefore, is worth more because inflation is going down. Apparently what the Fed is doing. Well, and we're exactly at Exhibit A. Can we use those fundamentals to predict what price is doing? Well, theoretically, we would assume we should be able to. Let's say maybe this, maybe that. Then news trading would be simple. Almost. But do you think they allow anyone, unless they have deep pockets? I don't know, if you try to enter long on this, betting on the long. Yeah, 50 points. Snap, done. Close right up here. But make sure that we stop out most of the longs that are in the market right now. Short-term longs. Where's the liquidity at? Let's take a look at ES here. Check out NQ. Yes, really just ugly as hell. 1 minute time frame. No inefficiencies to use at all. This entire movement right here. I mean, 9:30 opening. Tiny micro bullish fair value gap. Nope, no fair value gap here. Nope, 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 nope. Well, wonder why. No fair value gap on a 1 minute, even on a 1 minute time frame. And I know there's some people out there. I've recently talked to a member who's been with tactical traders before. I mean, it's fair, like everyone is having a different approach, and eventually you gotta find out which is yours, but a 15-second time frame, of course, yeah. Right here we snap sell side. Bullish fair value gap, go above, enter on these. You can scalp that if you want to, but yeah, you have to be excellent on your A game. You can't afford to fail there. Risk management has really to be, yeah, on point in order to trade, even consider trading on a seconds time frame. Sometimes we think, oh, okay, other traders are trading on the 15 seconds. Maybe that's helping me because trades are not really hitting my targets quick enough, and then it's always reversing back on me. A lower time frame rarely is the solution. Solution more often is, okay, let's actually look at my trades and see what I did right and what I did wrong. Well, and then we end up at problem A. Okay, how do I look at my trades? I only keep track of my PL. That's tricky. How would I do that if I don't journal my trades and take screenshots and anyway, let's go down to the 15 seconds time frame and try that. Hang on, let me actually, while talking about it, log into the TD accumulation zone and turn on our executions to make sure we journal. 2022 model right here, 2022 model right there. $315 up for the day. Well, you don't really have to worry too much about the commission if you trade futures. That's the cool thing. Unless you trade micros, yeah, maybe. It's still there. You pay $1 per contract, $3 per contract in and out. It's acceptable. You don't have to worry about the spread. It would be cool, yeah, but you can't afford to get lost and, oh, fair value gap, end up in analysis paralysis trying to chase something. There's a reason I'm not going down to that. I've tried it before, but whoops, snap, it's gone. You lose that control once. Of course, if you see something on a 1 minute or 5 minute, even that kind of sounds ridiculous. Dropping them down to the 15 seconds, looking for an entry. Ooh, yeah, possible, definitely. But you have to be on top of it, on top of what you're doing and not losing control. Easier said than done most of the times. Most of the time when we're trading. Why? Because we have that opponent, that common enemy, the market maker, who's sometimes more active than other times, manipulating, using the algorithm, maybe not the ICT algorithm, but the ICT algorithm, I would say, comes really close to what we get with the tools that market makers use. Algorithms, they don't constantly press buttons. Hundreds of people trying to manipulate price together. But it's good enough to trade. Anyway, I wanted to journal my trades since there are no new questions. Bento book. Doesn't matter which software you're using to journal your trades. The only thing that is important is that you keep proper notes, like put notes on everything. all these tags. There are going to be a few more improvements on this one. I've been speaking to Y2K Theory, one of our members who created this entire bento book thing, and I really like it because I like the stats it shows me, but I'm missing a few features, like basically imagine sticky notes, a sticky note section that you can access by looking at your calendar rather than seeing your P&L, because P&L doesn't really give you much insight in how good or bad the trading day was, especially if you go with the flow. You can end up gambling, taking on some more risks that you initially planned on doing, and you have a $500 profitable day. Well, and then you look at your calendar like, oh yeah, that must have been a good day. This actually was, because we followed the plan perfectly without any issues. But no, that's actually not the trade day account. That's the trade day account. Let's see. Trade day 50K. Put in that trade. So first we went short during the London session. So profit loss minus 250. I think, yeah. Now actually less, 225. Around that. On ES1. Let's check that out actually before we... Ouch, back in that fair value gap. Oof, I'm so glad that I closed my position there. Oh. Our entry right here. Stop loss was 4. Yeah, okay, perfect. That's reasonable. Zack. Targeted to 221. Below the Asia low. That didn't work. Take a proper screenshot right here. Market structure shift to the downside. The more, it's really, I don't know, can't stress it enough. Important to journal. If you don't want to pay for a journal, I also totally goddamn paper trading success. Yeah. That's the way. Just building that confidence. Yeah, a market maker algo. The signatures that we see, time being fractal, I perfectly understand that we see the same stuff happening on the weekly that we see on the 15 seconds time frame. That's just the nature of how price moves, or not the nature, but the way price is being booked. Snap sell side, moves away, inefficiencies, redeliver, continue higher from there. But I don't know. Couldn't give you a better answer. But what I was about to say is, if you don't want to pay for a journaling software, which is perfectly fine. I mean, you can start going for a professional journaling software once you get funded and get some payouts. What I would suggest you to use is OneNote. It's better than Exo, because on Exo you only keep track of your P&L, which no one really cares about other than yourself and your ego. What is important though is keeping track of your thoughts right here. So before I switched over to bento book, this is how I journaled. The 6th of July. All right. You can see, okay, movement, blah, 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 pre-London open. I take a screenshot, I put my thoughts in here. Price closed above midnight, and it seems to be respecting it. Yet, I didn't like the setup, since there are too many discounts left behind below midnight. Pre-3 a.m. setup could have been the close above the 135 M inversion for continuation, blah, blah, blah. Pre-London open entry, but we'll see second gap up. Rejection of the midnight open. London open out, minus $150, all good. With me there was the chance of it working out, no indication that it's going short really. Equal highs above, respecting bearish fair value gaps now. Keeping on with that journal for the New York session, TP hit, $200, volume imbalance. So once we got stopped out right here. I'm not sure how I can zoom into this. I usually do it on the iPad if I review it. Bearish fair value gap, volume imbalance, plus 10 for the session. Tried to continue, took a trade outside the session, didn't even think twice. The other trade prior to that got stopped out, $80. I don't know, I like really how you can put everything in here. It's for free. Download it. Most of the people have a, I don't know, either they're in university and they get Microsoft Office for free from the university, or they can snatch it from their workplace. They can buy a cracked version or a activation key online if they want to. Many ways to get that. But that's what I would really recommend. If you want to save a buck or few on too many memberships online. London session, setup pattern, 2022 setup. I fill in the text later and the notes. We have the screenshots. We add this trade. So right now our PL is sitting at 225 negative. Whew. Bullish order flow signs. We saw it coming. PL for the day is sitting at 315. 315 plus 225. 550 profit. $550. One. We went short again. Let's drop our screenshot in here. Session New York setup pattern. 2022 setup. Add trade. The rest I'm gonna add in later. Take a look at our overall dashboard. Up 325. Does that match up roughly? Yeah, that's fair enough. Take a look at NQ here. NQ is also pushing now. Coming back to price action. Let's see if we used anything on the 1 minute time frame here other than volume imbalances, because up until here, no inefficiencies being left behind. So the only thing that helped, 15-second time frame. If you had high conviction that we're gonna continue up, fake out up, fake out down, now we get the expansion with the new hourly candle at 10 a.m. It's basically when we started this entire push to the upside. Consolidation, next leg up, consolidated a little bit in our old 5-minute bearish fair value gap, expanded further to the upside, and now, yeah, well, I'm not really interested in it. We'll see what happens. Theoretically, would assume higher prices, DXY likely rejecting, but we're done with our job. We're happy. And nice, Agent Smith. Looking good. Keeping them profits big. Alright guys, do you have any more questions? Otherwise, that's gonna be it for the stream for me today.
Hello. Good morning.
Good
Or
morning.
after you, right?
Say it again?
I said morning, but you're afternoon, right?
Yeah, it's afternoon here.
Yeah, so I started watching that video about how the market makers have the MT4 software.
Yeah.
And how they set, the spreads and they
keep in mind it's from 10 years ago. So we don't want to even know how. I mean, imagine what phones were like 10 years ago, 2011.
Right.
So even more than 10 years ago.
Yeah.
Now a
So they've
phone.
got better software to do what they're doing. They're not going to take away that ability.
No, they're not gonna take a chance. And the money-making business, responsible for the wealth transfer that's happening in the stock market and forex market. They have limitations, yeah, but it's a very good watch.
The other thing is, I was going to say, can't think. Oh, okay. So as I was saying, so they have, they had that software. They can manipulate the spreads, and I'm just thinking about AI and
Yeah, of
how
course.
they're more than likely leveraging that, and how much they can move price. But because of the internet and mobile devices and software, you've got way more retail traders in the market now.
Yeah, definitely. Back in the days, like computers, MT4, all crappy. I mean, back then felt modern, but nowadays looking back at it, and yeah, like I said, thousands of traders just trading off their mobile phone, not even using the proper MT4 terminal, just looking at the charts, looking for some trades. I don't know. Like, yeah, not really what I would. But I get what you mean. Things change over time and they adapt as well. But I think it's pretty incredible that to see that from a video 11, not 12, almost 13 years ago to the day happens
No,
to show you that same signatures that we see day in, day out. Pretty cool. Worth
yeah.
studying and worth spending couple of days.
So on that trade, I was actually in NASDAQ and I got caught long as it retraced
Hmm.
down.
Only
And I
that's
was
a cool
like,
question, but how is it legal? I can't wrap my head around it. Well,
you know
big
what?
institutions.
They make more money paying this minuscule amount of fines because nobody goes to jail.
It all
They pay
started
more,
this. Yeah,
more,
sorry.
they pay more money in the fines. They pay less money in the fines than they do in the profits.
Yeah, you have to think
They'll
about it
do a
like that.
$10
Yeah, sorry. I
billion
thought you.
dollar deal and pay a $250,000 fine. Banks do it all the time. Wells Fargo got caught.
Yeah,
They were opening up accounts without people's permission. Hundreds, thousands, if not millions of accounts. And they made so much money off of that, and the fine was minuscule.
it's a big pants, big boy, big money game they play, and you also have to keep in mind like wherever you go in whichever big city you go, the highest skyscrapers, who do they belong to? Most of the time, the banks. Well, how do they get so much money? Because everyone in this world is having a bank account, having a loan, a student loan, a loan on your house or credit cards and blah, blah, blah. They make so much money. And, well, they have room to manipulate. No one cares about that. If Tom to the left or Matt right here is getting stopped out and losing their money, that's just the wealth transfer, the reverse Robin Hood effect. Well, it's just how the world works.
300.
Money moves.
All I need to make is 300, 300, 200, 200, 200 over the next 5 days, and I'm funded again.
Nice. Well, I think that's gonna wrap it up. Make sure if you haven't watched it yet, I know it's a long video, but I really think it's worth wrapping your head around this entire market maker thing. Not that it's gonna be like the holy grail. we already know that doesn't exist. We are basically the holy grail that have to master ourselves and be disciplined and all that stuff. But it helps understanding how price is being booked, why markets move the way it does, understand why we were wrong, and yeah, take it from there. I wanted to put that into the general chat.
Yeah, this isn't easy, guys.
If you want something easy, well, you landed in the
Microwave
wrong
frozen
place. Like,
dinner.
there's really so many more easier things that you can put upon you rather than trading.
Yeah.
Trading is like, I don't know, if a friend is asking me if he should get into trading, well,
Mm-mm.
I say yes and no. I really don't like, even if you want that friend, I've done that before, trying to help him, putting him up, setting him up with everything. Okay, like, yeah, just be consistent, don't make any stupid mistakes, otherwise you are gonna spend 2 or 3 or 4 years just making the same mistakes over and over again until it finally clicks. But by that time you've likely stopped. Yeah, well, you give them that advice, but goes in on the right ear, left on out on the left ear, and they wash it away. It's, you have to make those painful lessons yourself. There's no other way around it. If it would be that
And you
simple.
have to dedicate to learning the craft and reserving 3 to 5 years, not expecting to make any money. In fact, expect to lose money if you're going to trade live.
Yeah.
You know, that's what I did before. You know, like I'm at year three something, and so I got 2 more years before I not expect, but anticipate being profitable.
Yeah, it's fair enough. I mean, you could keep on looking on YouTube for a perfect ICT strategy that gets you funded. It's not gonna, it's, you won't find it. You will find people testing a specific month where they saw good results, or maybe likely saw it from another YouTuber, just copying it, putting a little twist on it and saying like, oh yeah, this ICT strategy, the first 1 minute fair value gap that you see between 10 and 11 for the magical silver bullet setup, 85% win rate, and then you test it and it's like, not really an 85% win rate. And you want to like, oh, I had my hopes up again, and you just keep on hopping from strategy to strategy. I know it's hard. I mean, today was hard. I was super close on not taking the trade, to be really honest. Super close. But I decided to take it. Not gonna make more mistakes on that challenge. That's really all it's about. It's day 8 from 66. Every day counts. But yeah, we simply think in the long run. Sometimes you lose money, you spend money, but imagining like, let's say you have your own business, whatever it might be. Initially, maybe at the beginning of the month or end of the month, you have to pay your workers, you have to pay your taxes, your accountants, whatever. You have to spend money on material. You have to give something away, which is also basically taking a risk because you expect it to make that in revenue back in. And in the end of the day, hope you're going to break even, or ideally also make some profit for yourself. But you don't think that just because you spent that money today on material, your workers, whatsoever, that the business is failing. And that's like, we have to look at trading. Trading, it's the same thing. Just because we gave away money here, that's material or just expenses. But we have to make sure that we show up and actually take it, not trying to get scared out by the market maker to not take this short when it's really looking this bullish. You heard me saying it a couple of times when I was looking at this, like, no, I don't think it's going to continue short. And that's the issue. I started thinking again. Whereas we should just execute and manage the risk wisely. Hit the 50%, trail our stop loss, barely any drought on it all. If we get stopped out, and luckily decided to close here, Really can't complain about that. 2-1, 6.5 points. Would my take profit target been hit? Now my stop loss was up here. That's a mistake. Right here. And I likely also know where the take profit targets are placed. Okay, well, do we allow other traders to hit their take profit target down there if they got it right? No, I'm gonna snap it away right in front of their eyes. Regretting it. Getting back to break even, triggering emotions, trying to hop in on the FOMO trade. That session today is done for me. There's nothing I'm interested in at all anymore. Can be happy with the profit today, back at break even on our challenge. Divergence between NQ and ES. Didn't take out these highs while ES did. So use this time to study, maybe watch that video. I think it's helpful. Other than that, well, yeah. Again, I think I said goodbye already. Then Agent Smith popped up.
Yeah, hey, you know,
Yay.
we
Like
don't get to
yesterday
talk
where we
much.
kept on talking until like 8 p.m. my local time. Like crazy.
Oh, it's the only way we can catch up, you know.
Well, I guess.
By the way, that video is great. There is another video that I will share with you, and you can figure out if it's good, where it's the guys that work the floor. And it's a similar kind of, oh, look at that. As it's going, yeah, they're getting these people out.
Always getting this right. Oh, are they triggering me into something? Oh.
No, well, that's the thing. They're shaking these people out. It's obvious. Look at that, man. That retracement. Oh, the other thing too is that I was trying to spot those W's that they were talking about, but this week I was not able to spot a W. You know, the whipsaw. I mean, it just kind of just went up.
Yeah,
Oh
if
yeah,
they
look
would
at that.
use the
Now
same
they're going.
W at the same time every day, it would kind of beat the purpose, or because then
I get it.
you could anticipate it again. I mean, I don't want to open the chart anymore, but I mean, I think I
Yeah,
put it in the VIP chat right here. What's that right here?
that's a
W.
W.
We
But
pump up
before that, see to the left. Is there
right
a
here.
W there or an M or?
There, well, it's not as simple as spotting the pattern, but from here on, we understand, okay, we have a trend line. Retail traders like the trend line right before the news. We consolidate, really squeeze here. Trap traders, if they want to go short with the break of the trend line, they likely got stopped. Even if no one engaged up here, you can see that this huge top wick was a clear indication, even on the 15-minute time frame, a pin bar to the downside. Manipulation, there's nothing really above us anymore. There's no previous day's high, previous week's high, a monthly buy side target. We've cleared all that. We are at the high of the week, and we look for a manipulation at the high of the week to trap traders long, like this ascending trend line, buying the lows every time right here in the support area, continue back up. I don't know, today a little bit harder to explain what market makers were up to. Likely another guy in control today before the news event.
All right,
Like,
guy at the desk.
who knows? But this is pretty cool. Like here, making look it's gonna go long, looking like it's gonna go short, like it's really gonna break. The DXY is pushing up. Boom, snap away, hit break evens or hit stops. Likely stops have been hit with this move to the downside for the longs. Continue lower, trap shorts, continue higher, liquidated trap shorts. But anyway, I think that's gonna sum it up. I really have to go to the toilet and
All right, sir.
gotta take my dog for a little walk. All right, I'm gonna be back tomorrow, see if I see anything on the charts, but I think I take some time off, and yeah, we'll be back tomorrow for a first day London kill zone for day 9 of 66. All right, guys, take care. Take care,
Yeah.
Smith. Bye.
Okay. Bye.